Global Monetary Watch, July 20th. Today we're doing a deeper dive than usual. Instead of a quick update, we're going to walk through the full picture of where the Iraqi dinar actually stands right now, its official rate, its market rate, the central bank's recent statements, the country's foreign reserves, and the broader economic pressures shaping monetary policy in Baghdad. Everything in this video is drawn from verified central bank data, IMF classifications, and confirmed reporting. No forecasts, no rumors, no what-if scenarios. Just where things stand, and why. Let's start with some background, because understanding today's numbers means understanding the institution behind them. The Central Bank of Iraq was established in 1947, originally as the National Bank of Iraq, replacing a currency board that had been set up in London decades earlier under British administration. It is entirely state-owned and headquartered in Baghdad, with its stated objectives being domestic price stability and a stable, competitive financial system. That mandate, stability first, is the lens through which almost everything the bank has done in recent years should be understood. Now to the numbers that actually matter today. The Central Bank of Iraq formally informed the Ministry of Finance that the official exchange rate written into the draft 2026 Federal General Budget Law is 1,300 Iraqi dinars per US dollar. That's not a new figure. It is the same rate the bank has used since February 2023, and the reaffirmation in the 2026 budget documents reflects continuity in government accounting and fiscal planning rather than any new policy shift. Analysts covering the announcement were explicit about this. Budget documents commonly reflect existing policy, not signals of imminent currency reform, and the confirmation of the 1,300 rate should not be read as an indication of a coming revaluation. It's worth pairing that with how the International Monetary Fund itself classifies Iraq's currency system, since the IMF's framing carries real weight internationally. The IMF continues to describe Iraq's exchange rate as a conventional peg, with an official rate of around 1,320 dinars per dollar. A conventional peg means the dinar's value is fixed to the US dollar within a narrow band, managed directly by the central bank rather than floated on the open market. That structure hasn't changed in years, and nothing in current IMF or CBI communication suggests it's about to. Where things get more dynamic is in the parallel market, the informal exchange rate you'd actually encounter if you were changing currency on the street in Baghdad rather than through an official government channel. In practice, the dollar has recently been trading somewhere in the range of 1,440 to 1,450 dinars, reflecting broader supply and demand pressures and shifting economic sentiment among traders, rather than any change in official policy. This gap between the official rate and the parallel rate is one of the most closely watched indicators in Iraq's monetary system, because it reflects how easily businesses and individuals can actually access dollars through the formal banking system. That gap hasn't been static. According to monthly reporting from Iraq Business News, the spread between the official and parallel market rates widened starting in mid-December 2025, before stabilizing again in early March 2026. That shift was tied to increased import demand and recent customs reforms, ordinary trade and administrative factors, rather than any deliberate currency policy change. It's a useful reminder that day-to-day movement in the parallel rate is often a function of trade flows and banking access, not a signal that the official peg itself is shifting. Independent market tracking data backs this up. Through March and into April of 2026, the USD to IQD rate held essentially flat around 1,310, with the dinar down only marginally over the prior 12 months, and forecasting models projecting it to remain near that same level over the following year. In other words, the data from independent financial trackers lines up with what the central bank itself has been saying: stability, not movement. Now let's talk about something more specific and more recent, because it's directly relevant to the kind of claims that circulate in dinar-focused online communities. On June 17 of this year, the Central Bank of Iraq issued a formal public statement addressing a piece of misinformation head-on. The CBI issued what it called a definitive, categorical denial of widespread rumors regarding a planned devaluation or adjustment of the official exchange rate, after identifying what it described as a sophisticated disinformation campaign targeting the currency. The bank's warning was prompted by the circulation of a highly realistic forged official letter across financial networks. The details of that forged document are worth walking through, because they illustrate exactly how this kind of misinformation spreads. The fraudulent text falsely claimed that the Prime Minister's office had submitted an urgent request to the Parliamentary Finance Committee demanding
a new era of
exchange rate
connectivity
change
is
to
emerging.
1,600
Iraq
dinars
is now
per
linking
dollar,
directly to the
supposedly
global
to address
economy,
internal liquidity issues.
pulsing with real-time financial
it had the
data.
appearance of an official communication. It referenced real institutions. And it was fabricated. In response, the central bank strictly cautioned media outlets, financial institutions, and the general public against interacting with or spreading the document. This wasn't a one-off clarification either. Around the same period, the head of the institution addressed the underlying question directly and personally. CBI Governor Ali Mohsen Al-Alak confirmed that current monetary policy remains committed to maintaining the existing official exchange rate, explicitly dismissing any plan to adjust it. When you have the governor of the central bank, the bank's own official statement, and independent market data all pointing in the same direction, continuity of the existing rate, that's about as clear a signal as this kind of story gets. Let's shift now to a different piece of the picture, Iraq's foreign currency reserves, because this is the part of the story that's actually been moving, and it deserves accurate coverage. Iraq's foreign currency reserves fell to $97.433 billion by the end of 2025, down from $100.367 billion a year earlier, according to official statistics from the Central Bank of Iraq. And that 2024 figure itself was already a decline from 2023, when reserves stood at $111.736 billion. So this is a multi-year downward trend, not a single data point. That decline continued into this year. Central bank data for April 2026 showed reserves falling further to $97.809 billion, down from just over $100 billion in March, with the bank's investment portfolio and domestic cash holdings also declining over the same period. Economic commentary around that release noted the pressures facing monetary policy amid regional and international shifts, and pointed to the need for continued close monitoring of fiscal policy. The reserve decline accelerated further into the second quarter. Official CBI figures showed reserves at approximately $90.8 billion by May 28, down from roughly $92.1 billion just a week earlier. That's a meaningful weekly drop, and it's worth understanding why it happened, because the cause here is specific and well documented rather than mysterious. Iraq's state budget depends overwhelmingly on oil. Oil sales typically provide about 90% of Iraqi state revenue. In the spring of this year, that revenue stream was disrupted. Following the closure of the Strait of Hormuz, which stranded most of Iraq's southern crude exports, oil revenue averaged only about $1 billion per month across April and May, roughly a seventh of typical levels. With that shortfall, the government has been leaning on central bank reserves to keep functioning, and Iraq's fiscal room to maneuver has been shrinking as a result. That's the direct, documented reason behind the reserve drawdown, a real external shock to oil exports, not a currency policy decision. It's important to place that number in context rather than let it stand alone. Even after these declines, Iraq's reserves remain substantial by regional and historical standards, in the range of $90 billion, built up over years specifically to give the central bank room to defend the currency peg during exactly this kind of disruption. A managed reserve drawdown during an oil revenue shock is a very different story than a currency system running out of options, and nothing in the CBI's own statement suggests the peg itself is under threat because of this. Let's also talk briefly about the structural reforms that sit in the background of all of this, because they're part of why Iraq's monetary story gets so much attention. Since the years following the country's re-engagement with international banking after periods of sanctions-related isolation, Iraq has been working to modernize how its financial system connects to global correspondent banks, the network of international banks that let Iraqi banks actually process and settle dollar transactions abroad. That process has involved tighter anti-money laundering and compliance requirements for Iraqi banks, along with a shift toward more transparent, electronic dollar auction and transaction platforms at the central bank level, replacing older, less transparent currency exchange arrangements. Alongside that, Iraq's government has pursued a broader economic reform agenda aimed at reducing the country's near-total dependence on oil revenue, the same dependence that made this spring's export disruption so consequential in the first place. That agenda includes efforts to expand non-oil revenue, formalize parts of the banking and business sector that have historically operated outside official channels, and bring Iraq's financial regulations closer in line with international standards. Progress on this front has been described by observers as uneven, and corruption remains a widely acknowledged structural challenge for Iraq's economy. That's a fair and accurate characterization, not a criticism unique to this analysis. The IMF's ongoing relationship with Iraq is part of this same picture. Iraq periodically undergoes IMF consultations, formal reviews where the fund assesses the country's monetary and fiscal policy and offers recommendations. The IMF's classification of Iraq's exchange rate as a stable, conventional peg, which we mentioned earlier, comes directly out of that ongoing relationship. It functions as a kind of external validation. When the IMF describes a country's currency system in those terms, it signals to international markets and banks that the system is being managed according to recognized standards, which in turn affects how easily Iraqi banks can operate internationally. Now, let's address something directly, because it's relevant to why a video like this exists in the first place. There is a long-running online community, going back well over a decade, built around the idea that the Iraqi dinar is poised for a dramatic, sudden increase in value, often referred to informally as a revaluation or RV. Claims
A
from
new
this
era of
community have
connectivity
circulated
is emerging.
continuously for years,
Iraq is now
frequently
linking
tied to
directly
specific
to the
dates,
global economy,
specific rumored rate
pulsing
targets,
with
or
real-time
supposed
financial
insider
data.
information. The forged document the CBI addressed in June, claiming a move toward 1,600 dinars per dollar, fits directly into that same pattern of unverified claims that periodically circulate and occasionally spread widely enough that the central bank has to respond publicly. The responsible way to evaluate any of those claims is exactly the approach we've taken in this video. Check them against the central bank's own statements, check them against IMF classifications, check them against independent market tracking data, and be skeptical of any document or claim that isn't traceable to an official, verifiable source. When you see specific numbers, specific dates, or urgent-sounding claims about an imminent rate change circulating in dinar-focused forums or social media, the CBI's own communications are the first and most reliable place to check them against, and as we've covered today, the bank has been direct and public in denying exactly this kind of claim. So to summarize where things actually stand as of today, July 20th. The official exchange rate remains 1,300 dinars per dollar, unchanged since February 2023 and reaffirmed in the 2026 budget. The IMF classifies Iraq's system as a stable, conventional peg. The parallel market rate sits somewhat higher, in the 1,440 to 1,450 range, reflecting ordinary trade and banking access conditions rather than policy change. The central bank has explicitly and repeatedly denied rumors of an upcoming devaluation or revaluation, including tracing one specific rumor to a forged document. And separately, Iraq's foreign reserves have been declining over the past several years and more sharply in recent months, tied directly to a documented drop in oil export revenue following the closure of the Strait of Hormuz, a real fiscal pressure, but a distinct issue from the exchange rate mechanism itself. That's the full, verified picture as it stands right now. We'll continue monitoring official CBI and IMF communications, along with independent market data, and bring you the next confirmed update as soon as there's something concrete to report. Thanks for watching Global Monetary Watch.